Hello, hello, hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing today? All right, so couple things I wanted to go over right now just to kind of set the tone, right? So first off, everything we discuss here is for educational use only. I'm not a financial advisor. I have no licensing in financial advice or anything financial, right? Taught economics, a bunch of other things too, mathematical modeling, all that stuff, and taught a shit ton of other things too. But I'm not licensed in finance, and I'm not your advisor, right? So this is an educational platform. My goal is, hey, can you think for yourself, right? Can you actually ask questions and learn, right? That's pretty much it. All right. So with that said, Clover Health overnight trading activity is $4.30, up 12.57%, up 48 cents overnight. And again, it's kind of trickling back under like $3.99. But overall, we're starting to basically see, the whole market's up. Trump has been working overtime in the weekend to get a deal with Xi Jinping of China. Shout out to all my Chinese folks on Lifetime Access. I love you guys. Hopefully one day I can go to China and you can show me around, right? And hopefully you guys can do the same here and come here as well, right? We believe in trade and we believe, fair trade. But in any case, so what I want to do is I just want to just kind of, have my discussions utilizing our proprietary software and everything that we have. And then maybe, look a little bit on the options chain, because the options chain has pretty much blown up. And it's going to be prognostic of what to expect in the future. Right. What was I going to say? Okay. So with that, what else? And then we're going to look at short interest volume. We're going to just kind of look at that and just examine it. But what I wanted to point out is the global AI investment and spending. I took this image from my colleague, the Kobasi letter. In fact, it's funny. His brother is actually a neurosurgery resident. So it's kind of funny how small the world is. So that's pretty cool. So shout out to them for their educational knowledge that they have. Okay, good. Let me just go ahead and, sorry guys, busy responding to emails here. Okay, good. So hold on, stupid email here. Okay. So as you can see here, this is global AI spending. In 2025, we have 1.48 trillion. Now it's about, next year it's going to go up to 2.02 trillion. Now, why is this the case? Well, we already know Counterpart Health is pretty much AI, but if you go ahead and look at it, they pretty much identified them. By the way, Counterpart, people don't know, is a subsidiary of Clover Health, right? Clover Health owns Counterpart. They created it. It's pretty much their Clover Assistant that's white labeled. But you can see value-based care at the point of care, but here's the world's leading AI-powered physician enablement platform. So pretty much, we're in that arena where we're about to become re-rated. Now, what does re-rating mean? Now, again, Vivek was talking about this, right? 2022 Oracle versus Oracle now. Re-rating happens when the price to sales per unit revenue sold starts to basically recalibrate to this new form of revenue. What new form of revenue? The potential SaaS like Eldaddy Blaine, who's pretty much basically coming as enterprise growth for for Counterpart, which is a subsidiary of Clover Health. He's going to be accelerating revenues. We already know that there's deals signed with Duke Connected Care, Southern Illinois, all these other places, and potentially more places that we don't even know about. And it's very exciting. And the market's slowly starting to pick up on this. Like, for example, in this article, shout out to, ASS full of SaaS, Clover Health, CLOV evaluating valuation after Analyst upgrade, option surge, and tech partnership speculation. So people are starting to, they're starting to put the pieces together, right? They're starting to like again, guys, by the time you hear about it, it's already too late, right? And the beautiful part is, I have been doubling down, buying more, and pretty much basically offsetting and taking and trimming off of my winners, Palantir and SoFi and a lot of these things. And I've been trimming off all these winners, MP Materials, It's funny because now all the big YouTubers are talking about MP. But if you go back to YouTube here, and if you look up MP, sorry guys, MP stock, Al stock trades. Sorry. Everyone's like talking about it now, putting Tom Lee's picture. Well, this was 3 years ago. In fact, it was actually longer than that. It was actually in 2022. So if you take 2025 minus 2022, it was actually 2.5 years ago, 3 years ago, right? So and here I was talking about it, and doing my due diligence, and no one was talking about it. And then what's going to end up happening is Clover Health, people are going to start talking about it, and that's fine because guess what? I don't care about being the first center of attention. At the end of the day, let those YouTubers do my job, right? And then let them pretty much basically explain the story of Clover Health. And what's going to end up happening is I'm going to profit, right? And you're about to see my portfolio that's public because I already have a $15-20 million portfolio. You're about to basically see this $1.2 million portfolio. Where the hell is it? 1.2, almost 1.3 million, right? It was 1.3 million a little bit ago. We'll call it 1.2. We'll downgrade it, right? This 1.2 million portfolio, I believe, is going to turn into a 10, 15, $20 million portfolio. And you guys are going to pretty much see it in real time, right? And, nothing like this has ever been recorded because people just don't want to share it because you guys know, right? All right. And I'm not a full-time YouTuber, right? I'm pretty much about to graduate from medical school, become a medical doctor, right? So it's, again, a lot of these folks, this is their kind of life work here on YouTube, and that's what they spend time on. This is just for me as a hobby to be able to help you guys see how Warren Buffett makes money, right? This is like intrinsic value calculation type of stuff, right? So from this perspective, so we have this. Now let's go ahead and talk about short interest. Now you can start to see the short interest is starting to decrease. Shorts are smart. They're starting to get out of it, and they're starting to cover. Short interest days to cover 6.2. So this could get really messy. Short interest definitely started to come down. So you are starting to see it from October 3rd, literally starting to trickle down. You see it literally here, right? If you go here and zoom in, you could see it was very high shares on loan, 101 million, and now it's dropped, right? So people are essentially trying to get out, which is fine, right? And all you need is just that the match in regards to the SaaS revenue. That's all we need. We just need some SaaS revenue. Got it. So we just need to get some SaaS revenue engaged. So what I would like to do is I want to just kind of make this a little bigger. So this is kind of a good example here. So you could see the blue is days to cover, and you could see as it goes down, the stock usually goes up, and now we're starting to see it go down, and then the stock slowly starting to rise. So look at all that potential energy we have, right? The last time it was this high, was when it tried to break out here, but then it got re-hit. The thing is, I don't know how long these shorts are going to be in control because, Jerome Powell's about to cut rates again. We're in a rate cutting cycle, and we're about to have quantitative easing. So there's like a common saying that people say is don't fight the Fed. And you know how I told you back in many videos, I have over 900 videos, right? Many videos ago, I went ahead and talked to you guys about how there's like different levels of smart people, right? There's really smart people that short, and there's really dumb people, and the standard deviation applies to anything in life. So there's going to be some stupid shorters that are just kind of like dumb money shorters that are going to continue shorting the stock because, again, they just don't understand, and they're about to pretty much get creamed in the next 5 years, right? And it's going to be great. It happens all the time. It happened with Tesla, happened with NVIDIA. It just happens, right? It's just a part of the gazelle lifestyle. There's gazelles in every position you take. And the gazelles that pretty much sold at the dip at $2.50, those have been eaten away, right? Thank you for providing liquidity for the wealthy. You are the reason why the rich get richer. It is what it is. Just pat yourself on the back and go back to your 9-to-5 job. And that's your destiny, right? It is what it is, right? I have no sympathy, right? It is what it is. Unless, you had to sell because of, health reasons and whatnot. But regardless, it is what it is, right? This is how it is. Welcome to Wall Street, right? We want to make money. We're not here. We're not here to, this is not a charity. Okay. All right. So, now let's go ahead and go to the live short interest here. This is, by the way, Ortex, I want to let's go to the official report, actually, official report. And let's go ahead and make this big. Let's just see if we can just cut out a couple of things. Let's just cut out this ugliness here, and let's just Let's just remove this so we can just kind of focus. Yeah. So as you can see, guys, this is probably one of the highest short and Ortex estimated exchange short interest we had, really honestly, since this location here, and also since the short squeeze that happened in 2021, right? But what's happening, guys, is the last time it was this high was back on April 2024, right when I was banging the table, pretty much saying I'm going to eat meat, right? This thing's at book value. What ended up happening is as the short interest started to decrease, you could see this was the potential energy, and we just basically slingshotted down. The stock price essentially went from 60 cents to $4.86, right? But what's interesting now is that now the short interest is here, right? And it's pretty high up, and we have all of this beautiful, all this mechanism for it to fall down. And what is going to happen? The stock price, I think, is going to basically follow, right? And this is quite different. Ideally, this is when the Feds probably started to think, to cut interest rates, and then, obviously things started to happen. But I think right now the Fed is in no position to hold in interest rates high. The 2 years screaming, and it's been screaming. Rates have been falling down in terms of the Treasury yield. So I think we're about to be in a rate cutting cycle. You're starting to see Jumia, go from like $2 or $1 to like $10 with a price to sales of 8.19 or something like that. It's price to sales of 8. And, if you go ahead and just really quickly here, go to the financial data and analytics metric chart, a proprietary software from Al Stock Trades that we provide to our lifetime access members. If you type in Clove right now, you can see from the perspective of gross margins, we're at 26%. And if we were to just basically go ahead and graph, well, we don't have to graph, just you could see gross margins went from like 2%, 12%. This is, obviously it started trading here, 12%, negative 5%, 9%, 20%, and then 26%. This whole thing is insane, right? The gross margins has been going up, and that's pretty much the power of the Clover Assistant, which is what they've been doing for the Counterpart Assistant, right? And you're starting to see it basically increase. And what's going to end up happening is how much of that is going to re-rate just from the insurance perspective, given that it's in a growth cycle, them expanding gross margins. Are they just going to basically be at 0.5 price to sales or 1 price to sales, or maybe, 2.5 price to sales? I would say once they become profitable and they have an actual price to earnings, they're probably going to be anywhere between a price to earnings of anywhere between 35 to 80, probably even higher. Who knows if we're in this AI bubble? And that's just from their insurance standpoint, which then might actually bring up the price to sales a lot higher, given that they're pretty much going to front end that growth. But yet again, we're just talking about the insurance line of the business because that's the only thing I have data for. So imagine once they basically start growing revenue. Now here they hired Blaine. They already talked about Vivek pretty much buying the largest shareholder, talking about the re-rating happened with Clover Health, or Oracle, insinuating for Clover. And you could basically see, and by the way, these are my words. He did not say he was insinuating. I'm saying he's insinuating, just as a respect for Vivek. That's not his words. These are my words. But in terms of just looking at Blaine, who they got, you can basically see here that from his Aldaddy past enrollment, you could see his success speaks for himself, right? Revenue is just basically growing, and he's just, that's just what he's good at, right? So there's that. Now, what do I want to do? So we talked about this. We talked about this. So now let's just kind of go here, and now let's basically talk about institutional ownership. So actually, no. Let's talk about I was going to go ahead and load this up right now and actually utilize this to look at what's going on. And this is our quantitative large versus small cap sentinel model. And it's actually pretty impressive. So there's a lot to this, but it pretty much basically tells you at the odds of when we're about to have small caps outperforming. And you could see this is very, very sophisticated model that we give to our lifetime access members. And we essentially have this data, and we actually teach, we teach how to, how this, what the math is here for. And you could see it's just such a beautiful, elegant way, and it's all powered by Al Stock Trades. But what I like to, basically see here is the median next signal is on September 2026. So next year, September, we should basically see small caps rise, and you're going to start seeing Tom Lee talk about it even more. You're going to see a whole lot of people. Again, I'm data driven. Everything I do, data driven. I am ones and zeros all the way through. And that's why I'm able to design this with my hands tied behind my back doing med school, right? So you can see here the probability of when we're going to outperform. So definitely within the next 36 months, small caps are going to outperform, and this is our time, guys, right? This is our time, because the last time we had small caps outperforming was here, right? Back on, here it was here, back on 2021, right? And this thing will basically go down. We will see small caps outperform. This is an RSI. You might think, is an RSI low bad? No. This is a ratio RSI. This is a ratio of taking the S&P 500 divided by Russell 2000. This is pretty much basically taking analyzing 2,500 stocks and inputting statistical data analysis on 2,500 stocks. And that's basically what I like to do. I like to basically take all this nasty noise and remove the noise and basically bring the signal, and then take a mathematical model unit for the signal, right? That's why, again, I'm in this to make money, right? So I just wanted to just kind of point that there. So we talked about this. Let's move this to the side. Let's go ahead and talk about quickly the VIX, guys. So if we go ahead and look at the VIX, our VIX quantitative model, a lot of people get very emotional, and you could see, these bubbles here these VIXs, when they rise to a certain degree. Every time I do this here, there's like this pop. This is an app called Text Sniper. It's supposed to read, but I like to use it to highlight. But as you can see, guys, when the VIX goes above 50, this has happened only 6 times in the history of the data that we have for the stock market. And the last time it happened was basically on sometime in April. And we can look at the data here. The last time it happened was April 8th, 2025. And I want you to remind yourself what happened in April 8th, 2025. Robinhood was low. Every stock was at its lowest, right? And it's unfortunate, ladies and gentlemen, because a lot of people were selling stocks, right? And then, we were like saying this could be a V-shaped recovery. It's one of the most hated rallies. In fact, Tom Lee was saying that too. A lot of people were saying that. And, it's because we have data. We're data-driven organisms, okay? We're data-driven creatures. And you could see when the VIX is above 50, which is what happened basically here. Now, what is VIX? We can go here and go to here, open up here and type in VIX. And you can see it peaked here. And the last time it was here, it was high. And it's not going to give you the real number because it was an intraday high. But you can see that's when the VIX was high, and it was on April 7th. And if you look at, for example, Robinhood here, when on your April 7th low was $34. If you would have purchased, you could have essentially 3x your money, an easy 3-bagger, right? Buy companies that you love and hold that are profitable, or, all that. So, it is what it is, guys. It's all data driven. So going back to here, you can see that it only happened 6 times in history. And these are the time points in which it had. But a better illustration is graphing the S&P 500 and also the Russell 2000. And you can see that whenever the VIX is above 50, you can see it hits near market lows. You could see literally it hit right here. Well, let's zoom in. You could see right when the market went down, you could see the green dot, yellow dot. I'm almost, the yellow gold. It's gold, right? It's gold. It's supposed to be gold, right? But it looks yellow to me today, right? But the gold here, we'll call it gold, right? To our stock trades, right? You guys can get access to this right now through lifetime access. Again, lifetime access to this type of data, unbelievable, right? But you could see this was a huge drop, but yet this is the signal. The signal reappeared right here. And then guess what happened? It was the bottom. It marked the bottom. X marked the spot, right? And you could see, well, Al, you got lucky. Well, it happened here too. It happened there too. Look at here. This was the great financial crisis when everyone was selling stocks in the great financial crisis because they're so scared. People like us, right? No, I wasn't. I was a kid, right? But I didn't have all stock trades back then. But Wall Street had this data, right? But I'm saying people like us because you're part of us now, right? This is the revolution. This is the democratization of financial literacy. Now you can be part of Wall Street, right? You have the same data as Wall Street. And guess what? This was the signal. Multiple signals, right? This was the signal, okay? So you can see how powerful this is. And oh my God, it only works for small caps. No, it doesn't. Here. Sorry, it only works for large caps. No, that's not right. It also works for small caps as well. This is fear. I like fear. I like to eat meat when there's fear. People make fun of me, right? You're not making fun of me now, aren't you? You're realizing, right? That it's just the rich get richer and the poor get poorer, right? You are where you are because you are your greatest enemy. You are the reason why you are not rich, right? You have to believe in yourself, right? I believe in you, right? But you have to believe in yourself. Okay, now listen. So 1, 2, 3, 4, 5, 6 times. And the last time it happened was, here. So you could see we're looking, so we analyze the data and we look 3 months ahead, 6 months ahead, 12 months ahead, 18 months ahead, 24 months ahead, 36 months ahead, and 60 months ahead. Ladies and gentlemen, you can already see that within the 3 months ahead, 24%, we have been outperforming the history of these signals before. 6 months ahead, 35%. So it looks like we're tracking along 2009, right? So we're about to be up maybe 47%, if not more. So this is going to be potentially, this might actually be our future, right? This timeline, right? You can see it kind of matches this here, right? It's pretty up there, right? So what was this timeline, right? This was, right before, imagine, in 2010, 2011, people were so scared to buy stocks. Like, oh my God, the great financial crisis just happened. It's going to happen again. But they don't know this data. They didn't have access to this data. You know what I mean? But you guys do now, right? Lifetime access members have access to this sophisticated data. And all you have to do is just press one button, for the love of God, and you can change it. Threshold 50, 60, whatever you want. And you can, within one button, just literally click the button and you got access to this beautiful data, right? Beautiful data, just literally presented to you on a platter, right? And it tastes so good, right? All right. And anybody can use this, all computers. Okay. So, all right. So now that's good. Let's move this to the side here. All right. So now let's look at institutional ownership for Clover Health. When we go and put in Clover Health, we look at institutional ownership. It's going to say it's going down. This is because it's updating, right? So when you go ahead and score it, this score is not correct, right? This is a wrong score. So don't basically take that into perspective, because it's loading the data. It says it's 0 right now. That's not the case, right? So we're going to be waiting on this, and it's going to be released soon. But I'm very, very excited. We have never had this many institutional ownership in the history of Clover Health. And it's looking pretty good, guys, in terms of the, I believe is the total invested, right? So we'll go ahead and pretty much basically talk about this when this updates, and it will update. So we move this here. Now let's go ahead and look at, contrarian sector analysis, Mr. Warren Buffett. This is pretty much Warren Buffett in the flesh, taking Warren Buffett's brain and mathematically modeling it and pretty much saying, let's go ahead and load. By doing that, hold on. Okay, I'm sorry. A button here called Analyze Next Sector Rotation. Let's go ahead and do that. It automatically does that for you. And then here it is. So you could see that, and we can go ahead and do base mode here and pro mode, and you can look at both. But you could see the contrarian sectors now are consumers, real estate, financials. Hey, look at Open Door, right? Amazing, right? Financials, energy, utilities. Hey, you need energy to power this here. Also, information technology. This is an outlier. This thing has been winning for a long time. Now, healthcare. Healthcare used to be 1, 2, and 3, but guess what? Healthcare has been growing, right? You got to monitor this every 3-4 months, right? Right now, the reason why it's lower now, it's because money's getting transferred from here to here, right? And you can see healthcare is pretty much winning right now. Let me explain to you. Let's go ahead and look at Hum stock, right? If you look at Humana stock, it's up 15% this year. In fact, go ahead and let's look at CLOV stock. CLOV stock, interestingly, with this bounce, is up 22% this year. That's actually impressive. Now, if you go ahead and take a look at the S&P 500, it is up right now 15%. So right now, Clover is actually outperforming the S&P 500, right? Just like how it outperformed last year, right? It outperformed a lot last year, right? So it'll be interesting how this basically works itself. Again, stocks go up, stocks go down. I am more of 5-year, 10-year holder. If that's how much I'm holding for. And if you're like, oh my God, I don't want to hold that long, go get a job, dude. Go increase your net income, right? Go out there, right? Be like, you know what I mean? Like, what am I doing right now? I'm doing my real estate business. This year, I'm becoming a doctor, right? You just, you got to. What ends up happening is people basically stand by their Robinhood or whatever. And they just Weeble, and they just kind of keep pressing and updating. And that defeats the purpose of investing. You want to have your money work for you. I don't check the stock price, right? I don't check it when I'm in my day. I'm in my day. You could talk to lifetime access members. I only come in for maybe 30, 40 minutes a day and talk to you guys, but I'm not consistently checking the stock price. I usually just joke around with you guys and send a bunch of gifts and memes, right? But so anywho, so we went ahead and basically talked about this. Let's go ahead and push this to the side. Now let's go ahead and talk about this quantum chart, which we'll be updating soon. Let's go ahead and grow this out, and then we can analyze it. And you can see here, we can put support and resistance, yada, yada. I put it in this section. Now, of course, we can make it in this section here, but that's not my goal. My goal is to go ahead and generate the report. So we're going to go ahead and generate this report, and we're going to basically see this support resistance lines and everything amongst that. And we'll go ahead and analyze that, right? And I'm going to go ahead and take a little break, okay? Oh yeah. This is a new browser. Pop up block. Please allow pop site. How the hell do I do that? How do I allow pop-ups? I'm using a new browser. Block at oh no. All right, now it's what? Sorry guys, hold on. It had to reload. I had it to because it was supposed to pop up a report. So that, let me just press it again. You can see beautiful rise. I mean, look at that. You see the support and resistance here. Look at that, right in that trading in that line here. All right, but let's just go ahead and regenerate report. All right. Sorry, I'm just checking the messages. Okay, did it generate the report? Okay, I just yeah. All right, so I got this new browser, guys, and this browser sucks. I think I'm gonna. Oh wait, continue blocking. Always allow. Okay, so there's two. Wow, there's like two different types of security here. All right, let's try it again. If not, I'm gonna switch to Google Chrome. This is like an AI browser. I'm just trying it out. I don't like it. I'm gonna switch back. It sucks. I wanted to see how it. Okay, there it is. Okay, thank you. All right, this is the Owl again. You guys get access. You know, it's crazy. You guys get access to this, the Owl stock trades, right? You know, this is you get access to this. Like always, not financial advice, just some really cool stuff. All right, so anywho, the report provides comprehensive analysis. It shows a bearish outlook in the medium term. Two bullish signals versus this. The reason why probably bearish is because the institutional ownership section. But it says here our quantitative analysis using the 5,000 path Monte Carlo sequence simulation over the next 50 days forecasts the base median price to be $4.21, up 10%. So it's showing that it's going to go to $4.21. How does it know that, right? Wow, how does it know that? It's not like it's getting access to the overnight trading right now because it has access to the past week, right? And it's able to basically do those simulations. And isn't that cool? This is called math. That's called math, right? All right, so now we understand that. But watch this. The simulation shows a bullish 95 percentile. Like, what is the upper quartile, right? $7.37, while the bearish 5th percentile is $2.39. That sounds about right? Like the 5th percentile is 239, the upper 95 percentile is 737, and right in the middle is 421. Sounds about right, and it'll continue to update as more data comes in. Okay. So here's this other stuff, but right now let's basically talk about this. This is the Owl Stock Trades report, guys. You guys get access to this. Isn't this amazing? Like, again, we have over 2.5 billion outputs of institutionally graded data. I will literally bring you the dust from the moon, just so you know if it will basically help you, right? So, anywho, let's go here. Here's support and resistance line. You can see, 377 and 383. That's kind of the battle zone. We'll see if it pops. It'll pop. 383 is here. After, there it is, it popped 351 on the daily chart. So right now, the next battleground is 440, and you can see, I guess from Twitter, what was the number here that it went up to? 430, right? And it most likely went ahead and stopped at, potentially 440 or whatever. And so right now, that's going to be the battleground now. And you can see it just basically broke past 350. And I believe Smash, one of our Lifetime Access members, said, hey, man, I was looking the options chain and it just kind of blew past 350. And, yes, that's what you're basically seeing here. And the next basically destination is 440. Okay. So that's kind of using technical analysis. And you see how sophisticated this is? You just type in the ticker symbol and it pretty much basically outlines it. And we're going to get so much better with this, guys. Okay. So now that we're pretty much waiting for 440, and we're going to see. Now, if we look at here, 285, we obviously blew past that. This will be updated soon. The weekly take time to update, but then you can see basically, 349 and then 439. So again, that 440 is going to be the stopper. So we'll see if it's able to basically pop through it just like it did the 351. All right. So now that we went ahead and did this, we passed 330. So here's the support and resistance lines for all sequences. So you can see we passed the 322. The next stop is 931. So once we go ahead and pass these micro ones, we're going to go to that $9 mark, and that's going to be insane, right? That might be in September 2026. Who knows, right? I don't know, right? At the end of the day, I'm a long-term investor. So here's, 391, 388. We're going to go past that. We're going to go. So that 383 is that was the stopper. And then we got that 482. So we got that basically 440 and that 480, 882. This is a Fibonacci sequence retracements. These are fibs at different time courses. Fibs are automatically granted and they're mathematically calculated for you. Again, all part of Al stock trades, right? This is our company. Okay. This is a very beautiful. All right. So you can see basically here, then you have the 520, 523. And then I want to scroll down here and I just want to talk about the analyst estimates. And let's talk about net income. Has it updated yet? Let's see. Whoa, 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 whoa. What is this? What is this? What is this? Felicia, are we seeing this? Whoa, 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 whoa. Whoa, 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 whoa. Are you guys seeing this? Are we seeing this? Look. This is the low estimation for net income. 2025, they're going to be negative. 2026, they're estimating them to be positive. I haven't seen analysts estimate that for a while. I haven't seen that at all. Are you seeing this, guys? I'm just letting you know. I did not plan this is not I'm doing this analysis in real time, right? I don't do scripts. I've been doing this for 14 years. I don't need to do scripts. So me seeing this, I'm seeing this for the first time with you guys. So 2026, we're expecting them to be profitable. Interesting. Here's 2027. And here's this. Ladies and gentlemen, I think, let's see here's the high. Whoa, 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 whoa. Okay. This raises so much questions for me, guys. All right, let's look at institutional ownership. No, let's exit that. Let's look at analyst estimates. Let's go back to net income. I got to see this, guys, with my own eyes here. 2026, they're expecting to make $20 million of profitability in 2020. I don't know if this is going to be true or not. There you have it. Yeah, it looks like a triple dragon. But what about the 3.5 stars in 2027? Oh, yeah, that's right. Andrew Toy said they're going to offset it with the SaaS business. We do get paid 4 stars in 2026. I mean, I was expecting, I was expecting them to be profitable, but I was thinking of having to readjust my alignment, longer. But okay, well, what are they expecting in 20? This is by the way, this is the low end too. So what is the high end in 2026? 20 million. So they're pretty much hitting 20 million. What about the low end of 2027? 34 mil. What about the high end in 2027? 67 mil of profitability. So what is the earnings per share then? 4 cents, 10 cents, 12 cents. This is 4 cents, 13 cents. It goes all the way up to 19 cents. So I'm just curious right now. What is the price to sales? Sorry, no. What is the price to earnings of PLTR? It's like insane. It's like high. It's like 220. So if we take 220, if we take 220 and we multiply it, let's say Clover can achieve 25% of that. That's about price sales of 50. Well, yeah, let's do that. And let's go ahead and take 55 now. And let's minus $0.04. Yeah, so that's about 220. So that could be so I don't know if this is the case, but we could have bottomed out. You know what? We know what that dip with that 250 dip. I think that might. I don't know. Maybe that may have been. It's very tough. Again, no one knows the future. Okay, but it may have been in the bottom. Oh, it looks like it, guys. Looks like we might be. I'm expecting to be probably. Well, I mean, hey, man, the analysts are buyers. I'm gonna wait until like next quarter, and we'll see. But the analysts are agreeing with you. Triple Dragon. Holy shit. Let's go ahead and multiply it with Palantir's. $8. Highest could be $8. Let's go back to 55. Let's go ahead and do 20 price to earnings of 20 cents, $10. Yeah, this will be interesting. Okay, so now let's do the intrinsic value calculation, guys. So we just type in Clove. Here's 520. You could see kind of the calculation. Remember when like it was down here? The calculations and numbers have stayed the same, right? They don't update until like they keep reporting, right? So you could see, remember I was saying this was all buy dip, but the green means buy the dip, right? All this means buy the, so okay. Like this is the most advanced intrinsic value out there in the market. Let me just kind of give you an example here. Sorry guys. If I was to go here and type in intrinsic value graph, you could look at it here, and this is kind of the graph where it shows like, the red is up here and the green is up here. Here, well, our calculation does it for you. You remember when I was like, all this is pretty much is good. But then sadly, people didn't, people just, the poor become poor and the rich become rich, right? This is kind of where we're at right now. But let me just go ahead and let's do some assumptions right now. It's tough, right? Because this is growing right now at 19%. Let's assume from here on out, Clover's going to grow 35% for the next 5 years. Okay, let's say they're going to be on a crazy growth trajectory. If that's the case, we will put 35 here, but then we have to look at the free cash flow. So just to be humble, we'll use 1.85 billion. Now, Wall Street, so that's about 92 million of free cash flow on average estimation. Now, let's go to the let's go here. No. Oh, for crying out loud, where is it? Let's go here. Let's look at revenue. So Wall Street thinks next year they're going to be at 2.5 billion. Now, in the next, 2029, they think 3.6 billion. Let's just take their number. I think this is they've always undervalued the revenue, but you can see revenue now is finally about to kick its ass from 2022. But let's look at, let's take 2.5 billion, right? Forget the 1.85 billion. Let's take this, let's do 2.5 billion. So that's about 125 million of free cash flow. So we do 125 million free cash flow, 35% growth rate. I want to see what this can go. Yeah, exactly. Yeah, we already knew this. So exactly, right? So base case is $22. Best case is $33. And this is like without SaaS, but this is probably some SaaS incorporation, right? Yeah, so there it is, right? That's pretty much it right there. So that's going to be very exciting, guys, right? And imagine the options change, right? Again, when the time comes, I'm not going to be releasing this information because, again, let me explain to you why. The reason why I'm not going to be showing all this is because I use this to help me with covered calls and cash secured puts. Because then, how do you think I knew? Let me go ahead and reset it for you. How do you think I knew? Like I knew that I should have used. Like, you see how this is red and this is red. You see that? I was doing covered calls here on about 20% of just 20% of my portfolio. How the hell did I do that? Right. Cause I knew, like I knew that, we were a little high up. We went from like 60 cents to like the red, probability wise, it was going to reconsolidate. So I was doing a lot of covered calls, cash secured puts. I made about an additional $400,000, So, and I was able to make more and buy about more shares, and it was great. Got more shares. I think the last one was like a cash secured put at 4, and I just kept on buying all the way down. Here. So like what ends up happening is I'm gonna end up. I can't be like showing this in the future because the stock's gonna go up. Our channel like what happened. So let me level with you. Okay. So Roaring Kitty, GameStop, two different investments. I'm a fundamental analysis investor. He's more, he does his own thing. Hey, many ways to skin a cat, right? When he was talking about GameStop, he only had like 4,000 subscribers, right? And then all of a sudden GameStop exploded, and then he had 100,000 subscribers. There's a potential probability that this might happen with this channel. I get a lot of people message me that have been in, that are very popular and whatnot, and they're like, hey, this might be, this might happen. And the issue is, I worked very hard for this data, and I'm trying. Again, I have I have a company to run, and this is the real estate business that I have, and I need the capital when I do my covered calls and cash secured puts. So I can't. So I'm doing this now as an educational, and just to show you, hey, from educational perspective, this is what it is. And then what's going to end up happening is, once the stock goes 15, 20, people that are watching, you guys know, right? Pretty much it's like, okay, wow, this is, there's undeniable 1,000 video proof. And there it is. But the problem is, the reason why I don't want to basically show this is because I'll give you kind of an example. This is like the options chain. And let me just give you an example. Let's say I want to do a cover. Let's say I think the intrinsic value is at 350. Let's say, it would be stupid to do a cover call now, but let's just assume that it's hovered around this price here. Let's say I think it's, it's a great time to buy, so I could do this right now. I can make on average $125,000 per week, right? Per week. So if I did that and multiplied it by 4, right? Off of just this price, that's about $500,000 per month, right? That's about $500,000 per month. That means in 12 months, I could make $6 million, right? But here's the problem. In order for me, and this is going to sound disgusting, welcome to Wall Street, right? In order for me to make that money, I'm selling a covered call to some gambler who's buying a call, right? And this buyer who's buying the call thinks the stock is going to go up, right? And he's going to be like, it's going to go to the moon, right? They're just going to be like all that, right? They're going to be doing that stuff, and that's fine. That's just stupidity. I'm going to take their money, right? It's my money to begin with, right? I'm going to take what's mine, right? I'm putting my Wall Street hat on. Please, I'm just trying to teach you, right? So they're going to be gambling. They don't know what intrinsic value is. They don't know what standard deviation is. They don't know that you can assess intrinsic value to the standard deviation level amongst all SaaS companies and do all the things that I haven't even shown you guys. The future of all stock trades is like crazy, right? So, and again, you guys know who I am. I did research at the top 1 hospital in the world, the Mayo Clinic. You don't get there by chance, right? So, and it was in neurosurgery, which is, right? So, what I'm going to be doing is I'm going to be looking at that, and that person who doesn't understand this knowledge, Warren Buffett, all these Benjamin Graham, Howard Marks, and all these things, they're going to be buying calls. They're just going to be buying calls every earnings. They're going to be wasting 5. There's people out there, guys, listen, you guys don't know. I've been in this for a long time. There's people out there that will literally buy 4,000, 5,000. They'll literally spend $5,000 every quarter on a call every earnings. And they're going to essentially, because they want to gamble, and guess what? 20% of the time, 30% of the time, they're going to win. That's fine. They're going to win. But guess what? I'll do a cash secured put, right? And I'm going to keep doing that, right? Obviously, once the stock goes up a little higher than what I anticipate, then the cash secured put needs to go away, and I'll have to find another undervalued company, right? We'll talk about that, right? that I have no problem buying treasuries or buying whatever, buying value stocks, and then taking that value stocks, taking about, $20 million portfolio, going to the bank and saying, I got 20 million of Coca-Cola Energy Transfer. I'm getting dividends on it. I would like to take a loan off of that 20 mil. And I don't have to sell my shares. So I don't have to pay taxes on those shares. Welcome to how the rich get rich, right? It is what it is. I'm just sharing with you guys my mission to the American dream, and you guys can follow, and you guys can basically see what I'm doing from an educational perspective, not follow as like copy. No, that's stupid. Every person has their own, literacy, right? And then their own, again, I don't have kids. I'm sure you guys have kids. Expenses. I'm going to have kids. So they're coming, right? I have this beautiful dog right now here, but, so I'm just kind of giving you kind of where I'm, going to in the future. The videos are going to get limited. I'm going to be, again, residency, taking care of patients, right? Videos are going to be limited. And the data, again, we're going to talk about minor things, but we're not going to be talking about this stuff because, again, I'm trying to make money, right? Lifetime access members, you guys have access to the data. You guys can go ahead and, use it educational. Don't take it as a grain of salt. I use it, for me, just for me, right? Because I obviously I believe in my own software, right? So, but I'm obviously biased. But yeah, so that's kind of what I'm looking at right now. There will be a time where gamblers are going to come online. You can already see them hopping in right now, but the stock is undervalued, so they're pretty smart or lucky. We'll see. But in the long term, there will be more gamblers, and those gamblers, you guys are going to help me, right? You're going to help me make my business. But don't worry. When I take your money through the cover calls, welcome to Wall Street, I will make sure I will give affordable housing to the people that need it the most. So your money is going to be paid to good use. Okay. So thank you for your donation to Wall Street. We need people like you, right? So we keep doing it, keep losing money, go back to work, right? But the free data is going to be stopping soon, right? But we have 1,000 videos, and I think this channel has served its purpose. Okay. All right. So there's that. People will realize when I say I'm not a YouTuber, they're going to understand what the hell that means, right? I'm not me, Kevin, right? I'm not like this. I want to be a doctor, right? That's my mission. And I want to have a small group of lifetime access members because that, we're going to end up closing it off. And just have a small group because, again, I'm trying to basically create like a country club style ordeal here, right? So now let's go ahead and just look at the questions real quickly here. We're pretty much about to hit the triple dragon soon. Earlier than what I thought, right? It's pretty impressive. But we'll see, right? And things can change, right? I know that my time horizon is 2028, 2029. But what's happening right now is the Fed's cut interest rates, I think in 1998. Then 2 years later, was it? 2 years later, two to 3 years later, we had a .com bubble. The bubble will start soon. Vivek, everyone feels it. I feel it. Vivek feels it. Everybody feels this bubble. The bubble is about to start. Bubble's not happening now. Maybe in some stocks, but no, not yet. The bubble will come, and once the bubble comes, it's going to be glorious. It's going to be very glorious. Lots of money is going to be made, right? No. Hey, absolutely. We're going to have the live streams in our Discord. Yeah. So, you remember when the stock was 250, 260? How many live streams did we have? We had live streams every single day. We were doing live streams, just talking and just mathematically creating our lattice framework of thinking. Right. So absolutely. Yeah. So for this stock, just talk internally in our platform, right? Because it's like it's Clover channel, right? We're talking about Clover right now. Yeah. Hey Al, thanks for everything. Gonna enjoy the ride with you. Absolutely, my friend. Wait a minute. Are you B-Rob? Where's B-Rob at? Isn't that B-Rob's photo? Was it subdue? You changed your name? Why did you change your name? $4 even now. Let's go. Oh, it's B-Rob. Why'd you change your name? Hey, yeah. He's hiding. You're hiding. Oh, yes, B-Rob. Okay, yeah. Oh, I didn't? What? But look at you. Sub to who? What is that? Sounds Indian. What's going on? All right. Maybe I don't know. I can't read anymore. But anywho, so as you can see, guys, I'm very excited. You're about to basically see the power of the intrinsic value calculation. You're about to basically see, and again, it shouldn't be surprising, right? I mean, you've seen Palantir, you've seen MP Materials, you've seen SoFi, you've seen Robinhood. These are all stocks. Robinhood, we talked about it when it was $9, right? You could look at the history of the videos. We talked about those things, guys. This is not rocket science, right? It's actually better if you're not smart, right? People that are genius, I have to dumb myself down in order to be able to be successful in the stock market, because when stocks go down, you get to be scared, and Harvard doesn't really teach you how to be a stock market investor. You really have to learn it through Scooby-Doo. Oh, is that what it means? Scooby-Doo. Okay. I love that name, right? I'll have a triple dragon, baby. Absolutely. Name change might be a YouTube thing. Would be criminal name. Yeah. Oh. I hit PLTR hood. CLOV is done deal. Reserved for retirement. Finding that goal. Yeah. So we'll talk about it internally in the market and in the Discord, and we'll use our software and we'll break it down. It's just this is a Clover video. I work on a Subarus and but this is my same account. B Rob is on. Oh, not sure why it's a different name. Interesting. Yeah, I know. Not too sure. But all right, guys, that's all I have for you. Very excited for what's to come in the future. I got really excited with this net, and you can see my attitude change when I saw this net income thing. That is interesting. So we'll see. What? It's weird, isn't it? We'll see what ends up happening. Quite interesting, right? So it's back above $4 now. So definitely on the after hours, overnight, different than after hours. But yeah. Or maybe it's my millionaire name. It's freaking hilarious. But that's all I have for you guys. God bless you guys. Love you all. I think we're doing pretty good. And hopefully your son is doing good in basic and is kicking booty. And yeah, we definitely need more coffee, that's for sure, right? And definitely lots of I'm like kind of like just like holy moly. But I'm gonna do a pre-workout now. Did some benching. I'll go swimming now. Rate cuts equals more money flowing in. Yeah. So rate cuts, right? Money market funds, right? $7 trillion. It's gonna, trillions of dollars are gonna be pumping this, stocks and real estate. So, yeah. Oh, by the way, shout out to my father-in-law. Yeah. So he just purchased Whiskey Row, a whole street in downtown Phoenix. He's literally a whole downtown area. He bought the whole street, which is pretty cool. So, yeah, that is really cool. Yeah, I don't know what it's like to own a whole downtown. That's pretty crazy. It's like weird, huh? Yeah. So you might see me having my next live down there. Just love all you guys. And yeah, I'll see you on the next one. God bless you guys. Have a nice day. Let's see. What's a good image for what's a good image for the end of this video? Let's use, I'm trying to find a photo. I think this is a good photo. And I think I like this one. Let's do this one, right? All right, guys. I'll see you on the next one.
Albert Allen's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health, we'll hit the jackpot. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's health, dollars gonna sway. In this game, no never going wrong. Stocks are climbing, reaching for the skies. Albert's insights cutting through the lies. Retail dreams standing tall, they rise. In this world of trades, we're the prize. Fortune calls, Albert leads the way. Retail winners, here to seize the day. Clover's health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Fortune calls,